Hello and welcome to the LiveSquawk's earning update. This is the halfway point now, pretty much for the earnings season. And so we wanted to give you some sort of a marker and just a bit of a benchmark as to what's been happening, what we're likely to see from the remainder of the earnings season, what's happened so far. And this week, some of the big key earners are coming up this week as well. So we wanted to give you a heads up to that. And I'm happy to be joined again by Christine Short of Wall Street Horizon. Wall Street Horizon is a TMX owned company and has spent the past 20 years focused solely on providing the most accurate corporate event data in the industry. And we're very fortunate to have Christine, who's appeared on a number of different business channels and media. We're blessed to have her on our show. So, Christine, welcome to LiveSquawk's earnings update.
Yes, hi. Thanks so much for having me back. I think it's a good time to touch base now that, like you said, we're about 50% through the earnings season.
Awesome. Why do you think it's a good why now? I mean, having, like you said, halfway through the earnings season.
Yep.
What's your view so far on how it's been in terms of a season?
Yeah, I think it's been a pretty good season. We always use the term it's a mixed bag, right? Because you're never gonna, get them all going one way or the other. But I think last time I was on here, I talked about how analysts had really lowered the bar coming into this season, which wasn't the case for Q2. The bar was quite high in Q2 because analysts didn't go back and ratchet down estimates ahead of that season. Well, ahead of this season, they pulled estimates back more than expected, which I thought was going to be a good catalyst for earnings beats and therefore um, the stocks would be rewarded on the back end of those beats. And we've certainly seen some of that. Like I said, we're actually by the end of this week going to be close to 70% of the way through the season. And right now, the S&P 500 has seen earnings growth of about 3.5% year over year. So it's the fifth consecutive quarter of growth, but it is the lowest quarter of growth since Q2 2023. So things are slowing down a bit. I think on the, if we talk about, like I mentioned, earnings beats, yeah, a majority of companies are beating earnings as they always do. 75%, I think, is the number of S&P 500 companies that have beat their earnings estimate. That is in line with the 10-year average, but a little bit lower than the 1 and 5-year average. I think that's fine. Like we know these numbers are a little bit manipulated, right? And so you're manufacturing these beats. What I think is more interesting is the percentage by what they've beat. That was a big topic in Q2 was that companies were beating, but they weren't beating by very much. They're only beating by a penny or two. And that's why investors weren't super impressed with Q2 earnings. Well, for this quarter, of the names that have reported and beat expectations, they've done so by about 6%. So that's certainly gotten the reaction you've wanted to see on the stock. That's above the 1-year average, but a little lower than what we've seen in the last 5 and 10 years. So that's all good on the bottom line. The top line is where we're continuing to see a little weakness as far as beats go. Only about 59% of companies have beaten analysts' revenue estimates. So that's below, all of the recent averages. And so that's one area that, you want to see robust top line growth driving that bottom line growth. So that's an area that we've seen a little bit of weakness this earnings season. But
Okay.
I just think the general takeaway is that it's been far better than recent, in terms of the recent past for revenue and earnings beats amounts, but it still does lag a little bit on the long run averages.
Okay, awesome. So in terms of this week, for example, we've had a couple of big earners so far, and we're looking, as you say, today we don't really get earnings on a Friday, but so today, so Thursday really is the sort of the peak of this week, I guess, in terms of the rest of the earners. So who do we have to look forward to?
Yeah, so this evening, so we're taping this on Thursday, like you said, we're looking out for Apple and Amazon to kind of round out the big tech reports from this week.
Right.
So much was riding on these names because, look, they make up 20% of S&P 500 market cap is Magnificent Seven names. FactSet did the math and found that, I mentioned growth for the quarter is expected to be at about 3.5%. But if you take out the Magnificent Seven, growth would be flat for the quarter. So 0% growth year over year because those names are adding so much to the growth rate.
Yeah.
So we're still looking forward to Amazon and Apple this evening. How's it been going so far? Well, Tesla actually kicked things off last week. They had great earnings. We saw investors react positively to those. Then we had Alphabet on Tuesday. Again, another great report. Shares rose, I think, around 5%. Revenue was strong. They, not only beat on the top and the bottom line, but they reported that their AI spend was paying off. They saw a 35% surge in their cloud business and an election-related jump in YouTube ad sales. So Alphabet was all good. We kind of started off the tech reporting week on a great foot. And then last night we had Meta and we had Microsoft come out. And, both of them were able to beat analyst estimates on the top and the bottom line. But as we know, it's not always about just those two metrics, especially for
No.
some of these tech names, right? Investors are looking for other things, not just did you beat on the top and the bottom line, but what's guidance, what are your expectations? And we saw Meta fall about 3% after they reported because they showed, they didn't meet expectations for user growth. That's a huge one for them. Daily active users, monthly active users. They warned capital expenditures would rise significantly in 2025. And so I think investors were really reacting to both of those data points. And then for Microsoft, it was their revenue guidance, a little softer than investors were looking for. That stock dipped 4%. And then into today, you're seeing all the major indices are still down on that, Microsoft and Meta drag. So we'll see if Apple and Amazon can kind of elevate things today because, up until this point, earnings have really been good enough to continue the momentum in the U.S. equities. And so
Sure.
last 2 days, we've seen a dip because of these big tech names because there's always a lot riding on these, right? And the last of the Magnificent Seven we don't get until November 20th. That's NVIDIA, and I would argue the most watched name out of this group. So we got a few weeks until that.
So just in terms of, do you think, looking at the Microsoft and sort of Alphabet reactions, are we always trying to nitpick? Is it almost a case of like you've got to find something wrong? If they're not stellar, then they've disappointed because they're such outliers and such, churners and just behemoths now within the S&P and just the wider equity or corporate landscape.
Yeah, I would agree with that. Look, the bar is really high for these names. They have very rich valuations and they're almost, some would argue priced to perfection. So you have to make sure that every data point in there is, going to help continue that momentum. And I think you're right. Investors tend to punish these names more when everything doesn't align because their PEs are so rich. And so, I don't know that it's always fair. These are still posting, great growth numbers, but I certainly do think that they are looked at with a more discerning eye.
Sure. And just quickly, because I noticed when you mentioned about the AI spending paying off, just very, very briefly, because it's not about AI today. What does that look like in terms of, is it new income? Is it just generally that their money's being put is more productive? Their investment in AI is now becoming more productive and showing end results. Is that the kind of thing that they are looking for and now happy with?
Yeah, I think it's all of that. I think it's more productive. I mean, they've obviously committed the funds. We've seen AI demand surging. You've heard from other peers in the space like NVIDIA that AI demand has been insane, and some of their newest products the demand there has been more than expected. So it certainly helps when peers are saying things like that. It's the AI trade is back. It was kind of this summer up in questionable about how profitable some of these AI investments would be, but I do think it's back, and I think Microsoft and NVIDIA are both at the forefront there, and they both seem to be benefiting by those AI investments.
Awesome, brilliant. Okay, so as I said, we've talked about what's to come. So in terms of this, I guess halfway point right now, we've also gone a bit over like how we view it. What did we say in terms of percentage? Was it a 3%?
Growth, yeah,
Yeah, 3%.
3.5% growth. But again, we've still got quite a few names to hear from. That's the blended growth rate. So that takes
Mm,
actuals for the 60% of companies that are reported thus far, and then
okay,
estimates for those that have yet to report. Again, pretty strong number. Revenue growth's actually even higher, closer to 5%. So
okay,
revenue growth has come in better, but it's just the number of companies beating there has been a little bit lower.
sure. Okay, interesting. So, what do we have left to look forward to? And again, we'll have a look at the upcoming election, and maybe even tomorrow. Even this is on Thursday, but on Friday we have the likes of non-farm payroll and the Fed next week. So, what do we have to look forward to in terms of longevity of this? Can we still call it a bull run? I know we've been on a bit of a mixed run of late,
Yeah.
but you can
Yeah,
still call it
I
a bull run.
yeah, no, I think we're still US equities are still performing quite well. Yeah, we've had a couple of down days, but I feel like we've got a lot of earnings left. I think what do we look forward to? Well, retail earnings are coming up in a couple of weeks. I think there's still a lot of questions about the health of the US consumer. We got some economic data this week that suggests they are still there and resilient. Consumer confidence surged to its highest level since March of 2021. You
Mm,
mentioned non-farm payrolls and unemployment come out tomorrow. What always precedes that is the ADP private job creation report. That came in the other day at 233,000 jobs created in October. That
mm.
was like over 100,000 more than the estimate. So best month for job creation since July of 2023. Um, we got GDP, for the third quarter. The first reading came in at 2.8%. Expectations were a little bit higher at 3.1%, but it was still
Yeah.
a solid report. And two-thirds of that is the consumer, and consumers, have continued to spend. They are using savings and credit to fuel those purchases, but I just think it's all a good sign heading into the holiday shopping season. I think even some other names that we've seen this week come out with earnings that are consumer facing, like McDonald's. They had a terrible quarter over the summer because they said they were losing their target customer, a lower income customer that comes to McDonald's for value, and they weren't seeing the value at McDonald's anymore. So they implemented a new $5 meal. And they just had blowout results when they reported the other day. They've
Mm.
seen a return of strength there, a rebound in sales after a weaker Q2. It wasn't true for all of the fast and fast casual names. I think Shake Shack came out better than expected. Chipotle, who had been performing well, had a little bit of a slip up in Q3. So it's not straight across the board, but it's their kind of first peek at how the consumer is feeling. And I just think with these jobs numbers, and again, we'll get more information tomorrow, but we know that is the most highly correlated data set with how people feel about their ability to spend, right? If you feel
Sure.
confident in your job and your ability to keep a job or get a new job, then you're more willing to get out there and spend. So, yeah, credit card delinquencies I think are still a touch high, but overall the picture for consumers here is still quite good. So I'd expect those retail names to come in nicely, and then again we'll get an update on how the holiday shopping season has started. It's already kind of kicked off in October, and what the guidance is there, because I think something like 20% of retail sales for the year are just in the holiday shopping season from October to December. So
Yeah, I
that
think you're
should
right.
that should be quite telling.
And this goes against what we were hearing mid-year, or what we were fearing mid-year about the US economy going into a tailspin. Obviously, we've had one interest rate. We had interest rate cuts already now from the Fed, and we're likely to see that carry on in the same vein. Quarter basis point moves for November and then December. So again, looking at the consumer, we're not seeing any telltale signs in any real massive way that's waning, as you said. So I guess we're happy to carry on in the same vein if you're looking at the central bank and its current sort of rate path. Well,
Yeah,
expectations rather.
yeah, I think we had a lot of commentary about a cautious consumer, and I still think the cautious consumers out there, the the value-driven consumer, so that might play into promotions over the holiday season or deep discounts that are, having to be offered. It's certainly going to be a competitive environment for retail. As far as rate cuts, like you said, next Thursday we have the next FOMC meeting. What's interesting is like all of this data is coming in a little too good,
Mm.
including inflation. We got the personal consumption expenditures price index today, which is the most kind of closely watched metric for the Fed as far as like targeting inflation. And the 12-month rate came in at 2.1%, which is, kind of in line with where a little bit higher, but
Yeah.
almost moving closer to the Federal Reserve's target. So it's interesting as all this data has come in better than expected. I'm always keeping an eye on the CME Group's Fed Watch tool. And the chance that there is no rate change next Thursday has moved up to 6% probability, whereas a month ago it was 0%. It was there will definitely be a rate
Mm.
decrease. Will it be 25 basis points or 50? And a month ago, I think there was a 35% probability of a 50 basis point cut. Now it's zero. So it's most likely going to be a 25 basis point cut, but there are those now that are wondering, things are coming in so hot. And again, we'll see with jobs tomorrow, but will there be a cut, right?
Mm.
So we'll see in a week's time, but it's just interesting to see how those numbers have moved as well.
Well, it's definitely a growing risk for December. That
Sure. Yeah.
question there. How do you think? Obviously, we know that rate cuts benefit banks. That's very generalistic, but banks maybe in the short term would benefit from rate cuts, but generally with higher rates, then there's more margin for a lot of their instruments. Is that if I get that right? I think I've got my economics right on that one.
Yeah, and it's funny as interest rates were getting lower, or there was the talk of them moving down over the summer. That
Mm.
was a big concern for banks, as you saw in their earnings commentary about interest income coming down.
Yeah.
Didn't seem to be a problem for them though when they reported for Q3. So yeah, there was some interest revenues that fell, but it was offset by strength in, pick who you want to talk about. Equities trading revenues were so
Yes.
much higher, and there was a little bit of movement in lending, not as much as, maybe some of the mortgage lenders would have wanted to see. But investment bank, like if rates go down, that certainly makes borrowing more appealing. And so
Mm.
the investment banks saw, a return of M&A, IPOs, the deal making pipeline filling up a little bit. So certainly when one thing goes there, there's other positives of lower interest rates that can help
Sure.
the big financial institutions.
Yeah, just on the broader picture, then obviously for the retailers, if you're keeping rates low, putting money in people's pockets, and therefore, as you said, people have been digging into savings. They'll be looking at, I guess, really low interest rates or expectations for lower interest rates into the new year. So again, there's nothing really at the moment, no big major signals that give us any sort of warning bells about the US economy at the moment, other than when either candidate gets into the White House and starts, I guess, implementing their mandates, as such.
That's right. Yeah. I mean, I've even seen some analysts say they don't, necessarily think it matters who gets in because there's
Right.
so much momentum behind US equities and neither policy, like you said, well, first of all, it takes a while to implement policies, but also neither policy, potentially takes away from that. And so the US is just sort of on such a roll as far as equities are concerned that it,
Mm.
it might not even matter. But again, yeah, we'll see what happens next week. And now I don't know if it's going to be a situation where we know the night of. You used to know the night of the presidential election who won. In 2020, it took 5 days or whatnot to tally,
Mm.
and I do think it's going to be a very close vote. So it could be a kind of a wait and see. But with a majority of companies reporting next week, and even the week after is another peak week. Now we'll get to hear about their thoughts on. I'm sure analysts will be asking those questions depending on who has won. they'll be asking CEOs thoughts on what that means for their company, their sector. So we'll start to get a little more granularity and clarity on who, wins and what that means for a particular industry or company.
How forthcoming do you, I mean, and this is a subjective one, how forthcoming do you think CEOs are about delving into the political arena and giving political commentary? Maybe not before the actual election, because obviously they don't want to be seen. Maybe they don't want to be seen to take sides.
Some don't, yeah.
Yeah, I know others that do. But after the facts, do they tend to want to use that as a means to say, well, this is now going to drive us forward? Is it seen as a positive now? Indecisions out the way, we can start planning for the future, sort of thing.
Yeah, and it depends on, what CEO it is, right? Some are obviously more outspoken than others, but you're right, they'll have more information. And so without being political about it, it's here's the information, here's a policy that's, potentially going to be enacted, and they have the information to act, like you said, to better guide 2025 decisions and beyond based on that. And so some can be quite transparent on the calls, some can be a little more vague, but I would certainly think they might not have enough time to think about it if they're a company that's reporting November 6th or 7th, let's say. But certainly, as it's solidified who the next US president is, the analysts will be asking companies, how do you move forward on this? How do you enact, what's the future outlook based on these policies?
Sure.
And I think most CEOs will be pretty forthright about that once they've had the time to kind of digest and work with their management team on what that looks like.
Excellent. Okay. Well, as we wrap up today's call, just anything you want to? Obviously, we have, like you say, next week the retailers, and like you say, we still have Nvidia, which is obviously possibly the biggest company now in terms of production, well, in terms of share value and everything else. Anywhere else, the Walmarts and the Targets this world, do they still hold the same resonance? I know we've got some energy companies reporting as well. Obviously, we've had the massive hurricanes and the Gulf of Mexico shutdowns. Any likely impact from any of these big company earnings over the next couple of weeks then that you can see that stand out to you?
Yeah, I mean, we've been getting some energy earnings. Look, they're a laggard this season. They're the only, I think one of the only sectors expecting negative growth on both the top and bottom line. We know where oil prices have been, and so that's not a huge surprise. As far as the week Nvidia reports is also the first kind of big week of retail. I mean, Walmart is monumental that week. They've sort of been the poster child of this post-COVID kind of cautious consumer, everyday low prices. They've been doing incredibly well. They've been getting a lot of market share. They've seen, consumers outside of their usual kind of target trading lower. So yeah, it'll be interesting to hear from them. We know they've done well, and it'll be interesting to hear, do they see that higher income consumers still trading lower? Same goes for the off-price retailers that have been big beneficiaries of a more cautious consumer. So that week will be big as far as just hearing from the different types of retailer and retailers and where people are willing to spend their discretionary money right now.
Excellent. Okay, Christine, thank you very much. It's interesting. Next week's going to be is a bumper week anyway, with everything that we have going on. So there's going to be plenty of we hope there's plenty of volatility just for the guys that trade that, but just also a bit of direction really once the election's out the way, and then obviously the FOMC, we start to get a bit more clarity, I guess, going into year end about the state of not just the US economy but the markets and generally, but this side of Christmas, what we're looking at, I guess.
Absolutely, always better to have more information, right?
Exactly, never hurts. Christine, thank you very much. Christine from Wall Street Horizon. I'll put up links and I'll put up just contact if you want to get in touch and use this service. Is a brilliant service, part of the TMX group, and I think it's well worth, as a trader, in my case, X Trader, but for people to go and just look at what's out there, and we try and bring you the best companies to provide the best information and services. So, Christine, thank you very much for that.
Thank you so much for having me.
No, absolute pleasure. And hopefully we'll get you on again soon to look at the next set of big earnings.
Absolutely.